Jake Freeman ran for president of the United States when he was 18. He got signatures, made a campaign committee, and registered with the Federal Election Commission. He wanted to be the youngest person on the ballot, said Erasa Bunku, who went to high school with him in a suburb of New Jersey and signed the 2020 election filing as treasurer. I didn't know at the time that he would become well known. Predictably, the run for president didn't go anywhere, but Freeman, who is now 20, is one of the youngest investors to make a 9-figure profit by trading the meme stock frenzy. The Financial Times said last week that a student at the University of Southern California who is studying applied mathematics and economics had made a $110 million gain by selling shares of the failing store Bed Bath & Beyond. In August 2022, Freeman sold his more than 6% share of the company for about $27 per share. The company runs huge stores full of household goods and gadgets. Just a few weeks earlier, when the stock was trading for less than $5.50, he had gotten it. At first, I thought it might go up to $8 or $9 a share, Freeman told reporters while waiting for the shuttle bus from the Los Angeles airport to the university campus. I was really surprised at how fast it went up. After buying more shares in July, Freeman sent a letter to the company's board of directors suggesting that they use a complex financial strategy that would take advantage of the retailer's status as a meme stock to raise cash and cut its debt by more than half. I can use my math skills to make plays based on statistics, he said. The story about Freeman's windfall in the Financial Times on Wednesday caused a media storm. News outlets from all over the world picked up the story, and social media sites lit up with the news. But the story of a college student who won a lot of money with meme stock also made a lot of people doubtful. On Twitter and Reddit, people asked a lot of questions, like whether Freeman really existed or was acting as a proxy for someone else, and how a young, inexperienced investor could have made so much money in such a short time on a highly concentrated bet. The biggest question was how he got the $27 million in the first place, using a car registered in the cowboy town of Sheridan, Wyoming. This is a state where people like to set up limited liability companies because it has low taxes and strict privacy rules. Freeman was used to having these kinds of doubts. After he revealed his stake in July, traders on Reddit tried to figure out who he was by doing a lot of digging. People thought everything from that "I don't exist" to that "I'm a front for a Taiwanese amusement park," he said. But when they heard that he had made such a big profit, they reacted in a different way. In an email sent on Friday, Freeman said he was overwhelmed by the storm of media attention and would not do any more interviews. In interviews with Freeman's classmates, mentors, and teachers, a picture emerges of a young adult who was ahead of his time and didn't feel the usual pressures of his age group. He spent his teenage summers working as an intern at a quantitative investment fund. Freeman is almost certainly who he says he is. Before publishing their story, the media asked for a copy of his driver's license, which had an address that matched the one on his Bed Bath filings. The registrar at USC confirmed that Freeman was in his senior year, which means he skipped a year and is on track to finish his degree early. Less clear is how Freeman got so much money to start his business. He wouldn't say who his investors were because of confidentiality agreements, but he did say that they were friends, family, and people in his circle. Freeman did an internship at Volaris Capital Management in New Jersey. The company's founder, Vivek Kapoor, was his mentor. Kapoor said he had nothing to do with the Bed Bath trade. The two of them have written 2 academic papers that look at complicated theories about debt defaults and options contracts. They learned Latinized Sanskrit together more recently. He doesn't fit the typical mold that schools are trying to make our kids into, Kapoor said. Jake is a smart, sharp guy who has a lot of brain cells and can solve any problem without dogma. Scott, Freeman's uncle, was the one who first taught him how to trade. He was a pharmaceuticals executive who helped start a public company that made hallucinogens. When his nephew Jake was 13, he and his uncle started investing together. The first bet they made was for $500. His parents gave him more money as time went on. He said that their help was substantial. Freeman grew up in Summit, New Jersey, a wealthy suburb where people who work in New York City live. His high school classmates say he is smart and mature for his age. Even when he was in high school, he was very smart and ambitious, said Sabumku, the friend who signed the presidential paperwork. The two of them were on a team that won an entrepreneurship competition in 2020 for a project that used plant enzymes to break down plastics in household trash. Freeman also went to the World Championships with a local robotics club. Jake's high school physics teacher, Jeremy Mormon, said, "What I remember about Jake is that he was very optimistic, very sure of himself, and willing to go his own way." After his final exams in his senior year, Freeman took an extra class on relativity with Mormon. All he wanted to do was learn as much as he could from everyone. Mormon remembers that other students constantly asked Freeman questions about investing. If you asked him about buying on margin, how this works, or what that means, he was always willing to talk and very open, he said. This summer, after a market crash that hit once hot stocks like AMC, GameStop, and Bed Bath & Beyond, Freeman began putting together the trade that would make him famous. Even though these companies have been having trouble making money, the value of these stocks has sometimes gone through the roof because of retail traders. Many of these traders hang out on Reddit message boards. By bidding up the price of the shares, these day traders have caused short squeezes on hedge funds that had bet that the prices of the stocks would go down. They took pleasure in the pain that professional investors were feeling and in what they saw as a rare win for Main Street over Wall Street. Freeman thought that the price of options on these stocks, which showed how volatile the stocks were, could be used as a way to stay alive. He started looking for a failing store to invest in where the market was way off about how likely it was to stay in business. In June, Freeman bought debts in the pharmacy chain Rite Aid, but the chance was gone when the company announced a tender offer that sent its bonds and stock soaring. Then, Freeman turned his attention to Bed Bath, a once popular stock that had lost a lot of value because of a drop in sales and a lack of cash, which made it look like the company might not be able to stay in business. "I saw that if they rearranged their debt in the right way, they could really cut down on their bankruptcy risk," Freeman said. He came up with a creative way for Bed Bath to deal with its debt by using the stock price's high volatility to offer bondholders a deal that would reduce the company's senior debt from $1.2 billion to $500 million. The plan depended on the company giving debt holders stock warrants and convertible notes in exchange for lowering the amount of debt the company had. If the company fixed its balance sheet and the price of its shares went back up, the warrants' value would go up. The unusual idea was similar to a plan that Hertz, a car rental company, tried to use in 2020. After filing for bankruptcy, Hertz tried to sell new shares, but the U.S. Securities and Exchange Commission stopped the move. Freeman wrote about his investment in Bed Bath & Beyond in a securities filing on July 20. Attached to the filing was a 9-page letter urging the company to move quickly on his proposed debt exchange. He thought that if nothing was done, Bed Bath would soon go out of business. Then, Freeman started talking about his investment on sites like Twitter, Reddit, and GME.com. Rod Alsman, who helped start the site with him, said he wanted to explain his plan to small investors. In August, Bed Bath shares started going up again after moderators of the Wall Street Bets channel on Reddit allowed people to talk about the stock again. It set off a wild rise in Bed Bath & Beyond shares, which Freeman said caught him by surprise. People were making a big deal about it on Wall Street Bets, which made people even more afraid of missing out, he said. At the beginning of last week, the shares went up even more after Ryan Cohen, the chair of GameStop and a meme stock figurehead, filed documents with the SEC on Monday that showed he had bought a lot of call options in Bed Bath in February and March. Call options are derivatives that can pay off big if a stock goes up in price. Freeman decided that the rally had made Bed Bath's shares worth much more than they were worth on their own, so he sold all of his shares. It worked out well for him. The next day, Cohen said he was also going to sell his share, which was about 12%, and the price of the stock dropped. They were worth $11 at the end of the week. Freeman says he has never talked to Cohen, but he did send him an email that he never replied to. Cohen didn't want to say anything. Since Freeman is no longer on the Bed Bath shareholder register, his complicated piece of financial engineering will never be put to the test. He won big with meme stock, not because he had a good idea, but because he followed a much simpler investment rule: buy low and sell high. He told the FT last week, "I thought this was going to be a play for at least 6 months." He also said that the trade worked out well for me and the people who trusted me. That's all for today. Thanks for watching, and don't forget to obliterate that like button and subscribe.